So you've seen a flight of gold out of London and coming into New York. And if we just move on from this page here, we'll be able to see some of the headlines covering this stuff. So it's just been all over the place, lots of speculation. Again, primarily what's been suspected is that it's the tariffs that is causing people to, repatriate or get their physical metals holdings that are elsewhere in the world, get them back onto U.S. soil. A lot of this stuff would be dealers as well who are trying to maybe shore up supply before tariffs come into place. And, with tariffs, we didn't really know if gold and silver would be impacted. The 25% tariffs on Mexico and Canada being two major suppliers of gold and silver, is part of why we're seeing all this gold move, but there's actually something bigger that we'll get into. But this is just kind of a show of some of the headlines that we've seen in the last couple of weeks about this massive, unprecedented flight of gold from London into the Comex in New York. Just to look at a couple charts here. On the next slide, you can see that green line, which is the price of gold, and that pink line, which is the change in tons in the London gold vaults. And if you look at the far right side of that chart, you see that this drop, this historic low in the amount of metal leaving London has also corresponded with a surge in price. We're back up above $2,900. We're right on the edge of 3,000, which is a huge, just kind of mental figure for gold investors to get there. Didn't think we'd see it so soon, but I don't think we're going to have any trouble getting through that. But this chart just illustrates the amount of gold that's leaving and the price increases that have corresponded with that. So there's a bit of a gold rush going on. Now, if we go to the next chart, we can see that deliveries into the Comex in New York is also, it's literally off the chart. Okay, so that red line on the far right, beginning this year, is the amount of deliveries and contracts that are being taken out on the Comex. And so again, just a huge spike, unprecedented levels of metal flowing into New York. And to kind of give you a visual cue as to when this all started happening, this next slide shows you that since the election on November 5th is really when the trend started to change. And so, you're just seeing this massive trend of gold being hoovered up by the U.S. It's coming into the U.S. from all over the world, but primarily London. And there's certainly a lot of speculation about why. Again, we're going to get into that. But any thoughts or comments on this so far, Colin, just with respect to the flight of gold?
Well, I think the first thing is overall just confidence in the ETF market, right? I think what we're showing is that they don't have every ounce backed, which is something that's always been reported, because when they started running short, they said, well, we're delayed. We don't have all the gold in London. And they said it could be 4 to 8 weeks. They're still delayed on shipments, so they're still trying to catch up. And I think that's always been the thing that people have wondered is when they're buying it on the exchange, are they getting it backed by physical gold? And they've always said yes. The other thing that I always think about is when you read it, these contracts, you and I would never get our gold first, right? If it proves that they don't have as much gold and they're short and everybody just started calling in their contracts, an everyday investor would have no chance, right?
Absolutely.
I mean, we're not getting, JP Morgan maybe is going to get some, or other large institutions, but the everyday investor would be caught holding nothing, right? And so that's I think part of the reason that you see this movement of metal here in the US is that people are just like, they want to know that this contract is back. They want to have it. They want it audited.
Mm-hmm.
And obviously we're seeing this, there's a trickle effect here because now there's more audits to come.
Right.
So I think it's just, in this day and age, there's kind of no reason to have an ETF form. You should have some physical because of this, because a regular investor has no protection for this kind of event.
Yeah, you're familiar with this saying, if it's not in your hands, you don't own it. And, of course, with segregated vaulting like we offer, it's not really the case. It is yours. It is in your specific vaulted in your name. But yeah, it's kind of a game of musical chairs, Colin. It's like you own paper contracts and futures contracts, and you think you've got gold, but we know that the leverage and the amount of contracts that trade at the LBMA or even at the Comex far exceeds the actual metal that's underlying in the vault.
Right.
And speculatively, sometimes it's talked about like 200 times the amount of physical gold that they have trades on paper. Like in silver, for example, they trade an entire year's worth of mining supply in a single half an hour. And there's no way that they're trading
Right.
800 million ounces of physical in a 3 hour window on any given Tuesday. So it's really just the paper that people think that they own gold with. But like I say, musical chairs, because when the time comes where you're expecting now to stand for delivery and you're expecting that metal, you're probably not going to get it. Now, in these contracts, you often have a clause that allows them to settle you in cash as opposed to
Right.
the metal itself. And I think we're going to see a lot of that in the coming months, which is more or less like a default and an admission that they don't have the
Right.
physical metal. Now, we're not there yet. I think what we're seeing are the early signs, which is delays and shortages, and they're stalling on delivery. And it's getting very, very interesting. And we may be getting to that point that we've heard talked about for so many years now, where the paper markets blow up and physical metals dominate and kind of rule the day. So what's happening though is with all this metal from all over the world, primarily London, but coming to the US, again, for whatever reason that is, and we're going to get into that, we're actually seeing some supply shocks. So if we go to the next slide, these are just some recent pieces of news. So South Korea's mint has totally stopped the sale of gold and silver as their supply tightens. And then as a sales guy, someone who loves selling Arger Heraeus, and you're very familiar with their product as well, they're a fantastic LBMA approved refinery. They make some of the nicest gold bars, and again, love selling their product, but they have stopped minting the 50 and 100 gram gold bars because they just are not able to source the gold from elsewhere to be able to produce their entire product line. So these are the beginnings again of global supply shocks, and it's just again underlining and underscoring the importance of having physical now and getting it into your hands um, before we see further shortages. Now, interestingly, you've obviously got the spot price, and then you have what are called premiums. It's the price you pay over and above spot for actual physical gold that you own. Metalor, which is another big LBMA international refinery, they're introducing a new per ounce surcharge above and beyond their regular premiums for physical
Mhm.
gold. So again, these are just early signs that we will see shortages. And what's going on here, kind of behind the scenes, is actually I think bigger and more serious than the media certainly is letting on.
Yeah, and I think, also, this, reminds me a little bit of there's a number of restaurants that are charging per egg now. I don't know if you've seen
Mm,
this.
no,
Yeah, because egg prices have shot up,
right.
uh, to an unbelievable level. So restaurants, what they're trying to do is they don't want this restaurant shock, so they don't wanna raise an omelet from, $12 to $15. So they're just charging per egg like 50 cents or 75 cents.
Wow.
And it's exactly what it sounds like they're doing with the bars is they don't want this culture shock of price, but they need to keep up with the premiums because obviously it's costing them more money. When you have all this gold surging into Comex and it's surging out of places that they would normally source for mining, because Comex is trying to keep up with all the bars that they're supposed to have backed.
Yeah.
That means the mints are having a hard time getting inventory, and they're having to pay a premium. So they're paying a premium. So I have actually metal ore to talk about that. I had this is metal ore. This is like one of my
Yep.
favorite kilo bars.
Love selling them.
So yeah. So
Never
and
do.
interestingly enough, the mints it's costing them more money to make bars and coins of all, but we are I think at our lowest premiums in the since I've been in the business
Exactly.
in 16 years. So
Yeah.
yes, people are the big boys are feeling it, but regular investors can actually take advantage of this opportunity because we've never seen premiums this low. So and I don't think it'll last.
Me neither.
Because unfortunately, what I think is happening is our and not to too far from where we're going, but I'll just say this point, and then I'll let
Mhm.
you get back into it. Is that the U.S. economy is a lot worse than what people realize, and
Of
people are
course.
selling their gold jewelry and their gold bars because they need it to live. And so there's been such a demand of selling of regular people that the price of the coins and the bars have dropped.
Mhm.
But that will be temporary. And so what I think will happen is as we go through our next surge and bull run, you'll see premiums of products go up plus the price go up. And so it'll be
Yeah,
a double win. When you're in bullion like our investors are, it'll be a double win for our clients.
agreed. Yeah, absolutely. So let's jump back into the charts here and we'll kind of keep chugging along because this all ties together really nicely. So, we're seeing record amounts of metal come in to New York, into the Comex. And what we can see, at least from some of the data that I'm researching in, is that there's a large increase in what are called customer accounts. So this is like not regular retail investors, but it's not institutional buying. So it's almost a way of kind of covering up who the actual buyers are of these, again, unprecedented levels of metal coming into
Could
the
it be family offices? Like
s-
what that I
hedge
mean that
funds,
yeah.
family offices, but there's some speculation that it actually could be, and this ties into this next point about the Fort Knox audits and maybe a kind of a gold revaluation, but it could actually be the Fed or the Treasury kind of in disguise.